Welcome to the first Marks Group Minute of 2022. I'm Brett Angel, Senior Wealth Advisor at Marks Group Wealth Management, here with Ben Marks, company founder and Chief Investment Officer. We wanted to talk a little bit about market catalysts. So it's a new world, Ben, in 2022. The first 2 months of the year were among the worst ever to start the calendar year for the U.S. equity market. March was a bit better, but the momentum is negative. I feel like the overall sentiment is negative, and there's always catalysts, right? Uncertainty creates opportunity, and I think a lot of investors are curious about what potential catalysts can change the tide here and lead the market higher. So give us a sense of what we're paying attention to at this point.
Okay, thanks, Brett. I mean, one thing we've learned over the years is that bad news has a way of becoming less bad over time. So I think the one catalyst is the Federal Reserve. I mean, we hear about it every day. The expectations are that the Federal Reserve is going to raise interest rates somewhere between 7 and 9 times this year in order to stifle inflation. We think, as they say, they're talking tough. The reality is, I would say that they're probably building a bit of a cushion in. And so one positive catalyst for the market would be that you actually start to see the economy slow, you start to see inflation slow, which is really kind of natural in the cycle itself, with or without the Fed's intervention. And as that occurs through the end of this year and into next year, the Fed may begin to backpedal a little bit on that, and you might not see those 7 to 9 interest rate hikes that the market is expecting. And if that occurs, I would expect that would be a positive catalyst for the market.
Right, and it's interesting talking about the Fed because the "don't fight the Fed" mantra has been front and center for so much of the last 10 years. And so now all of a sudden, instead of Fed policy being super favorable for the market, it's the opposite, right? We have higher rates, which is being perceived as a negative, but the Fed is still front and center. Their policy still matters. And I think people are talking about that Jerome Powell and the Fed have found a new religion now, being committed to higher rates. I agree with you. I'm not totally convinced that that's actually going to be the case. They're talking tough, but is it really a new religion or is it just new rhetoric? And I think the chance that it's the latter, which we view as more unlikely, does build in that flexibility for them to be more favorable than consensus expectations, and for the market then to get a little bit of a relief rally if and when that happens. A couple other things quickly that we just want to hit on as other potential catalysts besides the Fed. So one is obviously the war in Ukraine and the economic sanctions that came out of that. Obviously, if conditions improve there, the military conflict becomes less severe or mitigates a little bit, and those economic sanctions then are reduced, that would be an obvious positive for the stock market. And the other thing is the midterm elections, Ben, right? So just in terms of, again, historical context, midterm election years tend to be weaker for U.S. equities. It's also year 3 now of this bull market coming out of March 2020 when the pandemic hit. Third years in a bull market tend to be weaker than the first 2. There tends to be some consolidation. So it's just a reminder that some of these things tend to be normal and common. And when it comes to elections, midterm or otherwise, what's been the trend in the last decade plus is that no matter who wins, Republican, Democrat, not as important as we just get on the other side of it. We have a known quantity. Market can then just kind of reevaluate, move forward, focus on more economic related data as opposed to political. Plus then it's the middle of November, you're getting close to December, Santa Claus rally. There's seasonal factors working in the market's favor too. So those could be other things looking further down the road that would help move the market in a positive direction and kind of flip the script here in terms of the negativity that we've seen so far. Thanks for your insight, Ben. You can always find more information on our website at marksgroup.com.